I'll let you know what I think when it's time. I hope you like it. If you like what you read, please share and leave a message below. Let's start. The biggest financial revolution in US history has been going on right under our eyes while everyone is watching political theater. One company quietly spent more than $3 billion over the course of 24 months putting together what could be called a replacement for the Federal Reserve System. It is not a rival, it is a replacement. Don't think of crypto company pause when I talk about Ripple. That's exactly the idea that's being pushed while Ripple buys key financial infrastructure. The thing they've built is shown here. This isn't a new business with a white paper. The whole financial system is already up and running in 2023. Ripple bought Hidden Road for $1.25 billion. Hidden Road was a global multi-asset prime broker that worked with more than 300 institutions and moved over $3 trillion in crypto derivatives and fixed income. They changed their name to Ripple. It wasn't Ripple that bought a trade desk. They bought pipes from Wall Street. Next, G Treasury reported the value of unification. 1 billion connects more than 800 business clients to more than 13,000 banks, which moves about $12.5 trillion in payments every year very fast. This is $34 billion that will be added to the XRP system every day. You have 34 billion G in the bank. You and 10 billion other people have secret roads. Every day, that's $44 billion. You start adding as much as you can until you reach 150, 200, or 500 billion before you know it, and Ripple takes over the whole SWIFT system. If you slow it down, you can see that this is really good. To make Ripple work with the systems that Fortune 500 CFOs use to handle cash flow, foreign exchange collateral, and working capital for around 200 million transactions, as well as a big chunk of stablecoin B2B payments and automated back-office reconciliation. The rail really quickly was a key part. About 10% of stablecoin payments between businesses are controlled by it. If you look at the biggest player in the business-to-business stablecoin space, Circle, it controls 18 to 20% of the market. Tether comes in at 15%, and Ripple is slowly making its way up to 10%. I think Ripple wants to get another piece of this game so that they can control about 20% of all business payments made with stablecoins around the world. On top of that, Scott Percent, the US Treasurer, said that the safe coin market should grow to $2 to $5 trillion over the next few years. Ripple will be a part of that growth. Let's get it. As part of its stable coin business, Ripple added Rail to its RLUSD, instant programmable commercial money for business payment. To put it simply, Ripple Prime is access to the market plus liquidity. G Treasury is the same as the company treasury layer. Rail plus R. LUSD means USD for immediate settlement. The pipes of a new financial system are made up of these moves. Ripple also bought Medico to provide institutional-grade security for crypto tokenized assets, real-world assets, CBDC, and stablecoins. Medico is a New York-based charter trust that offers this service. Quickly, Medico and Wave Custody are not the same business. I thought they were the same, but Ripple bought Medico. They learned some about the technology and used what they learned to start two separate businesses. The Medico they got is here for you. On top of that, you have Ripple Control. These two companies work together with some of the world's largest banks. Ripple does have private ledgers for CBDCs as well. They've been moving that forward since, I think, 2019 and maybe even 2020. Importantly, Ripple has asked the OCC to become a national bank and open a Federal Reserve master account. If approved, Ripple will be able to store digital assets, print RLUSD, and settle transactions directly with the central bank 24 hours a day, 7 days a week. This means that Ripple employees will not have to wait in the hallway, but instead can go straight to the control room. Brad Garlinghouse has said that XRP is the most important thing. The Ripple does. Let's put it all together. Ripple Prime for access to the market, G Treasury for managing corporate cash, Rail and RL, USD for instant settlement, standard custody, Metaco for controlled vaults, a national bank charter for legal authority, and XRPL, ODL, ILP, and AMM for trustless programmable settlement. This is not a prototype. It is a full reserve, always on, globally compatible, tokenized money system. What problems does this solve that businesses and governments are so eager to fix? Issue A, slow settlement and risk with the other side. With XRP as a neutral bridge and RLUSD as a regulated settlement dollar, parties in different currencies can settle their accounts instantly. International lines and correspondent banking take days, cause FX slippage, and add extra layers of middlemen who add fees and risk. I won't get mine until you do. Right now, if you want to send money around the world, your bank will charge you $40, $45, or whatever it is for a wire. It usually adds up to about $140 billion a year for 10 years. That's $1.4 trillion in fees that banks charge us to move money around. With Ripple and XRP, you can speed up, lower the cost, and make payments more often. It also gets a lot cheaper to use stable coins or cryptocurrency as a bridge asset for international trade. With ISO 2022 data built in for audit compliance and fees, settlement goes from T+2 to 3 days to just seconds. Opacity and liquidity, security, and rehypothecation are all parts of problem B. These days, the collateral can be used more than once in both prime trading and derivatives. With Ripple Prime Plus, on-ledger custody, settlement, and security margin can be seen by everyone and checked. Tokenized custody stops people from secretly promising the same asset. A lot of the time, the scam window falls. Problem C, the fragmentation of company treasuries. Multinational companies have to deal with having bank accounts in 20 different countries, FX swaps, compliance checks, liquidity pools, and manual reconciliation. G Treasury has turned treasury operations at the Ripple Club into programmable rails, which means that value reserves and FX flow quickly across more than 13,000 banks and hundreds of corporations. Money from businesses turns into a program problem. D, accountability for regulators. Regulators now want proof of compliance. Structured data can be sent with every move, which meets the needs of AML, KYC, sanction screening, tariff enforcement, and tax reporting almost in real time. That can be checked and believed. Another person is not someone you have to trust. You can check them on the ledger, what is going to happen with the Fed model. The Federal Reserve issues base money and helps private banks make more base money through fractional reserve lending. This creates credit that turns into deposits and charges interest on it. The method is meant to be hard to understand. Now put the Ripple stack next to it. Big banks' black box nets are no longer needed because of the direct effect they have on openness, pressure, atomic timestamps, know your customer KYC, and auditable settlement. Direct effect, hash to liquidity without leverage, proves that fast settlement lowers the need to borrow bank IOU for moving money across borders. There are 3 effects of direct contact. Tokenized regulated custody decreases secret rehabilitation and pushes banks to use leverage, which has a direct effect on cash flow and provides alternative rails for sovereigns. If Ripple gets a Fed master account and issues RLUSD while being supervised, big businesses and treasuries will be able to skip some parts of the correspondent bank stack. This will have a direct effect on hash 5 and end hidden usury because it will be harder to justify taking interest on credit created by ledger entries. This isn't just about tech versus banks.